Hello, and welcome to part 2 in this 3-part video series where I teach you how to code your very own Forex trading algorithm. In this video, you will learn how to translate strategy logic from English to Lua, use simulation mode to test our strategy's code, and add custom functions to open, close, and manage trades properly. Before we get into the lesson, however, there are a couple of risk disclaimers that you must read and understand regarding Forex and CFD trading. Please pause the video and make sure you understand the risk associated in trading this market. Picking up where we left off on the first video, we have the code you see in front of you. We completed the init function and the prepare function and added indicator update functions inside the update function. The only thing left for us to do is to add the strategy logic. The first thing we want to do is write out the strategy logic in English and make sure we understand exactly what we want to happen. Remember, we have two indicators. We have a simple moving average and a slow stochastic indicator. So let's pull up a chart and make sure we understand what our trading logic should be. Here we have a 1-hour euro-dollar chart. Let's first add our moving average. We want a simple moving average, and by default we have the strategy set to 100 periods. Next, we need to add the slow stochastic, and our default settings for slow stochastic are 5, 3, and 3. These two indicators are going to work together to generate our buy and sell signals. More specifically, when looking at the slow stochastic, anytime we see the K line, which is the blue line, cross above the D line, which is the red line, that would be a buy signal. So if the blue crosses above the red, that's a buy, and anytime the blue crosses below the red, that would be a sell. Let me mark a couple of these on the chart so it makes sense. So when blue crosses above the red, that would be a buy signal. We'll mark the buys with green. And anytime the blue crosses below the red line, that would be a sell signal. So just as an example, this is 3 buy and 3 sell signals. But of course there are a lot more if we look to the left or the right. For the moving average, we're actually going to be using this as a trend filter or a direction filter. We only want to take buy signals when the price is above the moving average, and we only want to take sell signals when the price is below the moving average. So we would only be taking the buy trades during this period on this specific chart, and we would only be taking sell trades during this period on the chart. So let's put this logic into English first inside our code. So let's start with the buy logic. So first we need to make sure price is above the moving average. So if price is above the moving average, and then we need the K line to cross above the D line for the buy signal. So, and K crosses above the D line, we're going to buy. And then for the sell logic, it's going to be the opposite. So if price is below the MA and K crosses below the D line, then we would sell. And once we have our logic written out in English, we can now easily translate it into Lua. So let's start with the buy logic. So we first need to make a comparison between price and moving average. So if price, we're going to use the price source G source. More specifically, we want to look at the close price. So gsource.close for the current period, which is the most recently closed candle. And we want to check to make sure it's above the moving average, so greater than the moving average. The moving average indicator stream we named IMA. So IMA We're looking for the data for that indicator for the most recent period. So what we have so far is the price is above the moving average, and we need to see if K crosses above the D line. Now to do this, we could look at the previous bars K and D values and the current bars K and D values and see if they've crossed from one bar to the next, but there's actually a very simple function we can use in Indicore to see if one stream crosses above another. That function is called core.crosses_over, where the first argument is going to be the first stream, which is going to be the K line. To get the K line stream of the slow stochastic, we need the slow stochastic stream, and say .k. We're going to be comparing this to the D line of the slow stochastic stream. And then the last argument we need is the period we want to use, which is the current period. So reading this line of code in English, it would read, if the current close price is above the current moving average, and the K line has crossed over the D line, then we want to buy. We want to make sure we close off this if-then statement, just like that. And now we want to do the same thing with the sell logic. I'm actually going to copy over the buy logic into the sell logic section, then we'll change out the parts that we need to. So for the sell logic, we want to make sure the price is below the MA. So instead of price being greater than the moving average, we want it to be less than the moving average. And then we want to check to see when the K crosses below the D line. So not crosses over, but actually crosses under, which is another function built into Indicore. So this reads if the K line crosses under the D line, and this will give us a sell signal. So in just a couple minutes, we went from creating our logic visually on a chart, writing that logic out into English, and then writing it out in Lua. The first couple times you do this, it might be a little bit overwhelming, but the more you get used to translating English into Lua, the more it begins making sense, and the more complex you can make your trading logic. The last thing we need to do to complete our strategy's logic is to actually add buy and sell functionality. To do this, we're going to be using a custom function called enter. The custom enter function is a very easy way to open buy and sell trades. The way we call it is by using the function enter, and then calling either a capital B for a buy trade or a capital S for a sell trade. To make sure these functions work, however, we need to make sure we have the enter function included as part of our strategy. Let me add the enter function right now so we can take a look at how it works. So here we have the enter function. This is the function that's going to be run anytime you call the enter function. It's going to place a market order in the direction buy sell, which is what we pass through as either a capital B for a buy trade or a capital S as a sell trade. And then inside our parameters, if we want it to set a limit or set a stop, it will automatically do that for us here. You can look up inside the Indicore SDK if you want to see how each one of these lines work. But what's most important in this video is that you add the function into your strategy and then know how to call it properly when you want to buy or sell. To use this function in your own strategy, you can look at our GitHub that's linked inside the video's information box below this video. So now that we have our trading logic done, let's add this in simulation mode and see how it works in a real trading environment. To do that, I'm going to open up Trading Station. Going to click on System and go to Simulation Mode and go to New. Choose whichever currency pair or dates you prefer. I'm going to look at the year 2017 for the Eurodollar. And click Start. Simulation is a very simple way to test your strategy's logic to make sure that all the functionality works how you expect it to. Let's go ahead and add our indicators onto the chart so we have a good visual reference. So a moving average set to 100 periods, a slow stochastic set to 5, 3, and 3. And then let's add the strategy we just created onto the chart. If you're coding your strategy inside Indicore SDK, like I am in this video, your strategy will most likely be saved inside the Strategies folder inside Indicore SDK. This is the strategy we just created, so I'm going to drag and drop this onto the chart. This will automatically install the strategy and is immediately able to be used. Next, let's click on Trading Automation, go to New Strategy, and turn our strategy on. Okay, so let's double check our parameters. We're running this on an hourly chart with a 100 period moving average and slow stochastic set to 5, 3, and 3. We want to allow the strategy to trade. Yes. It will trade just 1K lots at a time. And let's have it set a 30 pip stop and a 30 pip limit. Everything looks good. I'm going to set this as the default, so if I have to apply the strategy later, I don't need to change the settings every time. And now let's click OK. The great thing about simulation mode is we don't need to wait a long time for the strategy to place a trade. We can actually fast forward and wait for trading opportunities to occur. I'm going to let this run for a while, and then we can take a look at the trades and make sure that they're being placed at the right time. Okay, so now that a few trades have been placed, let's pause it and take a look at the signals and make sure it lines up with our strategy's logic. So we can see we have a sell trade right here. This occurred because the blue line crossed below the red line, so it triggered a sell. And that happened when price was below the moving average, so the sell trade was placed. We look at the next trade, it was another sell. We had the blue line crossing below the red, below the moving average, so it's sold. Everything looks good so far. You'll also notice that during times when the blue line crossed above the red line, we did not see a buy trade, which is good because we only wanted to place buy trades when price is above the moving average. Now if we look to some of these buy signals, we can see when the blue line crossed above the red line and price was above the moving average, it did place a buy trade, and it placed a few of them actually. So this strategy looks like it's doing exactly what we want it to do. Let's try the strategy on a couple of different time frames to make sure we have everything we want. So let's change the chart to a 15-minute chart, and let's change the strategy to a 15-minute time frame as well. And let's change our stop and limit to values that are different than the default 30 pips. Let's say 100 pips, a 1-to-2 risk to reward ratio. Click OK. Let's run the strategy some more. Now because this is on a smaller time frame, it should place trades more frequently. But if you see what I'm seeing, it looks like it's placing a whole lot of trades, and all these trades are open at the same time. Now for your own personal strategy, you might want it to place more than one trade at a time. But for me, I only want one buy trade or one sell trade open at any given time. So let's add another custom function to our strategy that will detect when a buy trade or a sell trade is open and tell our strategy whether or not we should place another buy trade or sell trade. The custom function we're going to be adding is called have trades, and I'm going to copy and paste this function into our strategy. Again, if you'd like to use this custom function, you can find it inside our GitHub linked beneath the video. And all this strategy does is it checks to see if we have a buy trade or we have a sell trade, and it returns back true if a trade exists or returns back false if a trade does not exist. And it's really simple to call inside our strategy's logic. So inside our buy logic, before we place a buy trade, we want to see if we have any buy trades already. So if have trades, specifically, do we have buy trades, then place a buy trade. So this logic states if we have buy trades, then we can place a buy trade. But that's not actually what we want. We want it to prevent it from placing a buy trade if we already have a buy trade. So really, it's only if we don't have a buy trade do we want to place one in the first place. So instead of if have trades, let's do if not have trades. So if we don't have any buy trades, then we can place a buy trade. And we can do the same thing for our sell signals. So if we don't have any sell trades, then we can place a sell trade. This will make sure we will only have one buy trade or one sell trade open at any given time. So let's save this strategy, and let's replace the strategy that's running inside simulation mode. So we're going to stop this strategy. Let's go ahead and close out all of these open trades. We then want to add the newly updated strategy to our chart by dragging and dropping. Install, replace. And now let's turn on the strategy. We're on a 15-minute chart. And let's do the same 100 pip limit and a 50 pip stop. And click OK. So now let's see if it only places one trade at a time. Okay, let's pause it right there. So we saw that the blue line crossed below the red line while price was below the moving average, so it placed a sell trade. And then a little bit later, the blue line crossed the red line again while price was below the moving average, but it did not place another sell trade. So it looks like that logic that we added did the trick. It will only place one sell trade at a time. Now let's make sure the buy logic works too. Okay, so we'll pause it right there. So we had a buy trade that was placed back here when price was above the moving average and the blue line crossed above the red line. And then a little bit later on, we had the blue line crossing above the red line while price was above the moving average, and it did not place a buy trade, which is perfect. That's exactly what we wanted it to do. But you'll notice there's another problem that I see, and that's that this strategy can place a long trade and a short trade at the same time, which in the Forex market people refer to as hedging. Personally, I hate hedging. If I have an equal amount of buy and sell positions open at the same time, I'm effectively flat on that given currency pair, but I'm still having to pay rollover, and I'm paying the spread twice, getting in and out of both of these positions. So I want to make sure that my strategy does not hedge. In fact, let's do this. Let's make the strategy so that if I have a sell trade open and a buy signal occurs, it closes out the sell trade and then opens a buy trade, and vice versa. That way we can only be open in one direction at a time, and we'll never have any hedged positions. To help us accomplish this goal, let's add another custom function to our strategy called the exit function. What the exit function allows us to do is close out all of our buy trades or close out all of our sell trades. I'm going to copy over this custom function into our strategy. Copy this at the bottom. And all the exit function does is go through all of our trades, and if it has any buy trades or sell trades, whichever ones we select, it will close out all of those positions for us. So let's go up to our strategy logic and see what this looks like. So whenever we get a buy signal, the first thing we need to do is see if we have any sell trades that need to be closed out before we open a buy position. So to check to see if we have any sell trades, we can use the have trades function that we just learned about. So if have trades, specifically sell trades, then we want to exit those sell trades. And then, just like before, if we don't have any buy trades, we'll open up a buy trade. And for our sell logic, we can do the same thing, except we want to see if we have any buy trades that need to be closed out before we place a sell trade. So let me copy and paste this over, and then we'll change out the parts we need to change. So if we have any buy trades, then exit the buy trades. Just like that. So let's save this file, and let's add this version of the strategy into simulation mode. turn it on. So we can better see the effects of the changes we just made in our strategy, let's turn off the stop and limits. Because what this strategy should do now is open up a buy trade when we get a buy signal, and then close out that buy trade and open a sell trade whenever we have a sell signal. So effectively, any signal we get is going to be what we call a close and reverse signal. It's going to close out the current trade and open a trade in the other direction. So let's click OK and see if that actually happens. Go and hit play. Here we have a buy trade that just opened. And this should stay open until we get a sell signal. Looks like it closed out the trade and opened short. That's exactly what we wanted it to do. And then it went from short to long, and then long to short again. And so if we pause it, we could see it more clearly. So we were long until we got a sell position, and we went short. Up to here, we had a buy signal, which closed out the short trade and went long. And then immediately we got a sell signal again. So we're getting chopped around a little bit in this flat market. But the important thing is that our strategy logic is working the way we want it to. It's only opening up one position at a time, and it can only be open in one direction at a time as well. Now, there's going to be an infinite number of little tweaks like this that you could do to your strategy. A couple off the top of my head is that you could use that exit function that we just used and have it close out trades if price moves below or above the moving average. So rather than wait for an actual sell signal, we could just close out a long trade if price goes below the MA, or close out a short trade if price goes above the MA. Or maybe you could change the slow stochastic trigger so that it only trades if there's a cross when the slow stochastic is above 80 or below 20. That way we'd ignore all of the crosses that occurred in this middle area. In the end, if you're able to clearly explain the trading rules you want in English, you could convert that into Lua code. If you've gone through all the steps in the first video and this video, congratulations, you've completed your first trading algorithm. In our next video, you'll learn how to backtest and optimize your strategy using FXCM's backtesting and optimizing tools.